The biggest change is because of the RMB depreciation and the expectation of the RMB depreciation and the pressure on SAFE, which is the regulator for the outflow of money. They have issued a series of rules and regulations restricting Chinese companies to wire money out of China or to convert RMB into US dollar in any form. So that is just a continuation of the restriction of SAFE and the pressure, because of the pressure on outflow. But in terms of fundraise, this actually has already started at the beginning of the year. Right after the Chinese New Year, we almost saw a overnight change, and a lot of the fundraising efforts by wealth management firms, by private banks, and some of the trusts raising RMB in China and trying to wire the RMB outside China and convert them into US dollar and invest into US dollar funds. Everything almost stopped during that period of time. So for the rest of the year, for the second quarter and third quarter until now, it has been very, very difficult in that front. I have serious doubt about it. There are two aspects of it. One is from the recipient countries, the target countries, and the other is from China itself. From the recipient countries, we have seen a lot of discussions about national security applications and checks against transactions where Chinese investors are involved. Partly because of misunderstanding or a lack of understanding of who is making the investments and who are behind, why the investment structures are what they are, because some of them, as we know, are made with a consortium or made as a partnership structure. There's a concern that some SOEs are hiding behind the partnerships, with a Chinese government mandate. The other part of the equation is the continuous restriction from the Chinese SAFE, which is the regulator regulating the outflow of RMB. And because of the recent restriction to be confirmed that the threshold of conversion from RMB into US dollars is lowered to $5 million US dollars from $50 million US dollars for a transaction to be approved by SAFE, then it casts a lot of doubt on the successful rate of Chinese investments overseas, because especially in a very competitive bidding process, the foreign seller will not be able to get comfortable that the purchase funding will be actually there when it's time to close the deal. You still see the usual terms and usual asks by international and sophisticated LPs, such as most favored nation clause and reduction or special fee terms and carry terms. On top of that, because these LPs continue to have the willingness to have access to the local market, and they are not familiar with the market, so a co-investment right is very commonly seen in the negotiation process, and they want the real participation rights or priority rights over any co-investment opportunities. That is even a bigger trend now. And also the other terms that we often negotiate now is the social and environmental policy, because a few years ago it was just the development financing institutions asking for these terms. But now even those socially conscious, the socially conscious LPs are continuing to ask these terms. In terms of compliance and reporting, I think the answer is very simple. First of all, the senior management has to be aware of it, has to really know what it means. So it really has to come down from the top. If they understand it and they know it's very important to comply, the back office and the compliance team will be will be provided with the necessary tools. And the last important piece in the puzzle, which is also very, very important, is to get qualified service providers to provide the compliance and the system, the reporting system, telling the office what to do, and coming up with a very sophisticated investor reporting system in order to do that, and information collection system as well.